The RBI policy after two successive rate cuts in February and April. Should we expect one more? With growth hitting its lowest level in 5 years, the chorus for a rate cut is definitely getting louder. Majority of market participants polled by CNBC TV 18 expect a rate cut, but will it be 25, 35 or 50? Ritu Singh is here with the highlights of the key findings.
The Monetary Policy Committee of the RBI is expected to cut repo rates for the third time in a row, bringing it to 5.75% according to our poll. Now, while on one hand, low growth and soft inflation will build the case for a rate cut, uncertainty about oil prices, weak El Nino conditions, slow transmission of rate cuts by banks could hold the RBI's hand. But of course, the majority seems to think that the case for a rate cut is stronger. Therefore, 70% of the respondents to our poll expect the repo rate to be cut by 0.25% in this policy. 10% are even expecting a 35 basis point rate cut from the governor. For the full financial year FY20, majority of the respondents expect a 50 basis point cut. Some even expect up to 100 basis points cut. Now, on the macro picture, 70% of our respondents again expect RBI to lower the GDP growth forecast for FY20, and accordingly 70% of our respondents also expect the GDP growth forecast for the first half of FY20 to be lowered in tandem. However, for the second half of this year, GDP forecast of 7.3 to 7.4% growth may be left unchanged. Do remember, the growth had slowed down to 5-year low in the Jan-March quarter of 2019, and that may well be one of the factors that pushed the MPC to go for a rate cut. The other big factor, of course, will be inflation, and the majority of our respondents expect the CPI forecast for the first half of FY20 to be left unchanged. As for the second half of FY20, half of the respondents expect that 3.5 to 3.8% CPI projection to also be left unchanged. Do remember, CPI edged up in April to 2.92%, but it continues to remain well below RBI's comfort zone of 4%. Another factor that could again support a rate cut by the MPC. However, the economists polled by CNBC TV 18 do not expect RBI to change its stance from neutral to accommodative just yet. And lastly, the statement of the policy itself, that is expected to be far more dovish compared to the previous policy.
Okay, all right, Ritu, thanks so much for that. Well, we have with us a couple of bankers then to discuss what are their expectations from the Reserve Bank of India. We have Mr. Mohapatra, the MD and CEO of Bank of India, as well as Mr. Rao, the MD and CEO of Allahabad Bank, who join us on, on the phone line and in the studio as we speak. Thanks so much, gentlemen, for joining in now. Mr. Mohapatra, coming across to you first, before we discuss the expectations in terms of what you're looking at from the Reserve Bank of India, wanted to quiz you in terms of your exposure to the DHFL group on the whole. We understand that close to around 50,000 crores of their book is funded by banks. Does Bank of India have an exposure either in terms of bonds or any kind of funding?
We don't have any exposure to bonds, but we have exposure to their assets, but no exposure to bonds.
So what can you quantify the amount, sir? Is it approximately 3,000-4,000 crores odd? Because the banking space is accounting for 50,000 crores odd of their exposure. So 4,000 crores is the exposure. Can you confirm that?
Yeah, that is in the public domain. We have that exposure, but as of today, they are addressing the issue, and are quite hopeful that it will be addressed positively.
So what is the exact exposure? I mean, as my colleague was saying, is it about 3,000-4,000 crores or more than that?
Yeah.
Okay.
No. Around that.
Around 3,000-4,000 crores. So what are you hearing as far as the resolution is concerned? And do you expect a lot of these loans, to be stressed? I mean, are we looking at further NPAs as we head into the next few quarters?
No, we are waiting for the final report. But as per the information available to us, that they are arranging to, because that 7 days grace period is there, and they are arranging to pay that interest amount within that grace period. And the rest of the amount also they have arranged through different means to raise the resources. And we are quite hopeful that it will be addressed positively. We are watching very closely the developments.
Okay, so you're quite confident that this amount will be honored, right, by the DHFL group? Any indications have come from them?
Whatever information they have given, whatever information they have given to us, that interest portion, whatever default has happened, but they have 7 days grace period, and they are quite sure that it will be arranged within that period. And then rest of the things they are arranging, to raise resources from different ways. And as per the information available to us, we are quite sure that they will be addressing the issue positively.
Okay, Mr. Rao, good morning. What about you? Does Allahabad Bank have any exposure to the DHFL group?
Madam, with respect to Allahabad Bank, while we don't have exposure to the bonds, we have exposure to the credit, but it is a very small level at 120 crores. And we are not expecting any impact on that. We'll wait and see how they're going to take out the resolution mechanism. However, it's not going to impact our balance sheet.
Okay, all right. Then let's focus on the big event today. That's the Reserve Bank of India policy. So, Mr. Rao, coming across to you first. What are your expectations? Are you baking in a 25 basis point cut, maybe a 50 basis point cut, or are you expecting even some tinkering in terms of maybe a CRR cut?
No, we are not expecting CRR cut. While 25 basis points rate cut is expected across the industry, we also go by that the same. If there was an opportunity for RBI to tweak between the 25, that means if they want to break away from the tradition, we were thinking probably 35 basis points would properly indicate the rate cut required. However, we are not expecting that kind of a tweaking by the MPC at this point of time, since it would be for the first time. So on the lines of the industry expectation, as a banker, we also expect 25 basis points cut with a neutral stance, with a more dovish approach.
Okay. The more important question, Mr. Mohapatra, to you as well, is whether this will get transmitted, because the 50 basis points rate cut up until now has not gotten transmitted to the system. So whether it's 25 or 35 basis points, will you guys pass it on, Mr. Mohapatra?
If you notice, it's always this question of transmission comes to the discussion. If you notice, 3-4 years before, home loan rate was 10.5% around. Today, home loan is 8.5, 8.6 rate. So you have seen the transmission happening in the industry. It's not that transmission is not happening. But apart from, this RBI rate cut, there are other factors which, which are responsible for deciding in favor of rate cut. But always bankers respond to the, market, and they go for, market-oriented approach. So why don't you think that bank will not be responding? Of course, if you see, recent times only, last 1 year, may not be, it is not adequately, transmitted. But if you see the other macroeconomic factors like deposit growing 10%, advances growing 13%, and other issues, so it is a very market-driven approach, and I'm quite sure that all industry and everybody, all stakeholders, they enjoy the transmissions over the period of time.
Okay, so you're assuring all our viewers at least that if there is a rate cut, their loans will get a little bit cheaper, as you're saying that you've done it in the past, and you're looking to transmit that to your all your borrowers as well. Do you expect anything, any sort of a package coming in for the NBFCs or housing finance companies as well in this RBI policy?
Everybody is concerned about. If you see, when they started this NBFC challenge last September, October, since that time, all the government, regulator, bankers, everybody, promoters, everybody trying to address. And this NBFC, any industry, they get into cycle every 5-6 years, and they address the issue also. And this issue, when it started last October, September, everybody was very much concerned, but then they have managed till date. And RBI also supported through different ways, and government also supported, bankers also supported. And I'm quite sure if the situation demands, then everybody will come to the rescue. And economy is more important. India is more important than anybody else. So everybody will be playing their role. So I'm quite sure that it will be taken care.
Sure. Mr. Rao, if you had to, specifically tell us about the A, B, C things that you would expect from the RBI to address the NBFC and the housing finance crisis, what would your wish list look like?
Yeah, Madam, there are 2-3 important factors. From RBI perspective, RBI can only look at creating enough liquidity in the market, so that whenever there is a requirement of rollover to be done by the banks for the NBFCs, it can be undertaken. But the more important point is, the asset liability mismatch available with the NBFCs, they'll have to address that in an expeditious manner. If only rollout is a solution, I am afraid the solution in a logical end will not take place. So NBFCs themselves, particularly those where they have lent to real estate in anticipation of liquidation of the excess inventory available with them, all these factors also need to be taken to the logical end. So the available resources at RBI to take care of NBFC crisis are limited to the extent that the liquidity is created in the market and the rollovers take place with the bank, so that they've got time frame to tie over their financial problems. But the tie-overing of financial problems should be taken on priority in terms of their liquidity mismatch. That is as far as the NBFC position is concerned. With respect to the economy expectation from RBI, other than the repo rate cut, we see that there is a stress in MSME segment, there is a stress in agriculture segment as well. And we also see in unemployment, all GDP growth has gone down, though the World Bank still declared that GDP for FY20 could be around 7.5. There are quite a few issues which probably may not be addressed by RBI directly, but then government also has to come into picture. But with respect to the policy perspective, repo rate reduction will be the, I expect the least thing to happen, which should trigger many more things to come from the government in order to take care of the stress currently seen in the economy.
Okay, Mr. Rao, Mr. Mohapatra, thank you for stopping by and giving us your expectations. So that's the expectation that bankers have. They will be passing on the rate cut if it comes through. And on the NBFC crisis, they expect a lot of immediate measures like the ALM mismatch that should be addressed and some liquidity measures as well. Let's see what comes through. But moving on, before we end the show, SL Infra, which has been making efforts to sell assets to raise funds for debt reduction, may soon announce one of the first deals, much to the relief of Zee Entertainment investors. Nisha is here with us to give us more details on that. Nisha, hi, what are you picking up?
Good morning, Sonia. Yes, this will be the much needed relief and respite coming in for the Zee Entertainment investors. While SL Infra, the group, the promoters have really been coming out with conciliatory statements on how they are looking at selling various assets in SL Infra for monetizing the company in order to reduce its over 11,000 crore rupees of debt. But no such announcement has really made it to the exchanges so far. So the first one in that lot could be announced very soon is what we gather from sources with direct knowledge. Of course, the deal talks have been on. SL Infra was in talks with Edelweiss to sell 2 of its transmission projects, and that we gather from sources with direct knowledge, the reliable ones, that that transaction could be complete, and it's the valuation of 2,000 crore rupees, and that's the kind of fund that SL Infra could be raising very soon by the sale of these assets. This will be a very, very important move. Remember, they have been trying to sell a lot of assets. Their solar assets have also been looked at by various investors. No such deal has been consummated there. As far as the road assets are concerned, 2 of such assets are being looked at by CDPQ, a Canadian pension fund as well. So all those deal talks have been going on, but the key to all this is going to be a final announcement. That's what we are gathering from sources with direct knowledge.